It's Alissa Coram here, and today I am joined by a very special guest. We have David Ryan, who worked directly with IBD founder Bill O'Neill as a portfolio manager for O'Neill & Company. He's also a three-time U.S. investing champion and has multiple decades of experience running hedge funds and mutual funds. David, it's always great to have you on the show of IBD Live, and it's great to have you on this show. So thank you for joining me.
Thank you. It's always fun to do these things.
Great. Well, our audience is in for a special treat and we have to find something to get excited about, right? Because the market is so terrible. But we're excited today to talk about a bear market checklist and what you are doing to prepare for the next bull market. So we have that to look forward to. That's the silver lining, right? I mean, there's a lot of doom and gloom out there, but it's that hard work and preparation right now that is really going to pay off for investors watching this show.
Yeah, this is something that I do every week, but but especially at this time in a market like this, you don't want to just say, "Oh, nothing's working. I can't find anything at least to write down or a list to write down." So, I've got a number of different points of things of what to look for, what to do on the weekends, during the week, as the time goes on. So you've got a list of potential big market winners as we get closer and closer to the next bull market, because this for some stocks, this bad market started a year ago in February. For a lot of the major averages, it really started at the end of the year and the beginning of this year. So we're now almost 6 months, at least on the averages, into it, and a year plus on some of the individual stocks. So every day goes by, we're getting closer to the next bull market.
Love that. Yeah, we have to remain optimistic and at the ready. So the first thing in the checklist is basically to assess your portfolio and what you're seeing right now in your holdings.
Yeah, and that's the first point I wrote down. I called it "Stop the Bleeding." If your portfolio is still fully invested, or you still have a lot invested, and I would say a lot invested is really anything over 50%. You should go through your stocks and look and see which ones are way off the top. I mean, stocks that are down usually over 50, 60, even 70%, you should look at them seriously and say, is this stock really have what it takes? Is this going to come back? Because usually the stocks that are down that much, they're down that much for a reason, and either the technology is changing, or they're losing market share, or their earnings are rolling over. And so on some of these things, you just have to really bite the bullet and sell them out, because you need some cash to get, when the market starts turning, you want to be in what's going to be the next bull market's leaders. Because a lot of these stocks that are down 70 and 80%, they're not going to come. Some of them aren't going to come back. Some of them are just going to be laggards for a number of years. So it's best to get some cash so you're ready to go when the next bull market starts.
So say someone out there watching this is just starting to actively manage their portfolio, and they're waking up to that important need to actively manage their positions, and they're sitting on big losses at this point. Now that we've come so far off of the highs, I mean, we get questions, I know you see them too, what should I be doing right now? And I feel like stopping the bleeding, that's so important. But one of the, I think, psychological challenges that people face right now is, but what if we are close to the bottom? And what if I'm selling my stocks at the lows? I feel like that's a very difficult position to be in. But what words of wisdom do you have for people who are in that situation?
Well, if we were at lows right now, then you would see, usually along the lows, and these are some of my points, that some of the leading stocks of the next bull market are setting up weeks and months before the bull market starts, before you get a follow-through day. And right now, you're really not seeing it. There are very few stocks that are actually in uptrends that look good. And today they got to the oil. They really, in the last few days, have gotten to the oil and the gas stocks, and crude oil cracked. And so it seems like they've gotten to everything now. But even, what is going to happen is we're going to have to probably spend a lot of time just kind of bouncing along the bottom and trying to turn up and such like that. But I don't see a sign of stocks setting up yet. So I think we're a ways away, and maybe we usually get a real low in the fall, the September, October period of the year on a calendar basis. And so, I think we've got a long summer, and we've got until the fall to probably build new bases, see which stocks stop declining with the next move down. So I would at least take some of the ones that have just been crushed so badly that probably aren't going to come back, and just start raising at least some bit of cash.
Yeah. And I think it's a very important point that you're making about building a watch list, because not only is it important to build and maintain and constantly refresh that watch list during that time, so that way you can take advantage of those potential next big winners, but it also is a good way to determine the market's health too, right? The more setups that you're seeing could mean that we are close to really turning a corner in a more meaningful way.
Yeah, and because you want to be on, well, again, the more setups you start seeing, the closer we are, and you want to be on those big winners of the next bull market cycle, because there's no guarantee that these ones that you own that have come all the way down are going to actually turn and then rip up to new highs. It usually doesn't happen. It usually, when it's, and especially these are stocks that made big moves in 2020 and 21 that have come down so much. Usually it takes them a couple of years to reinvent themselves, to get onto a new product cycle and innovate. And so it's probably these ones are probably going to sit out the next big market move, and you'll make your money back faster in these new market leaders than the ones that have been destroyed.
Right. Okay. So for an actionable part of this session here today, David, speaking of watch list stocks, let's talk about how you screen and some of the screening tools that you use to find those next potential leaders.
Yeah, well, using MarketSmith is so great, because it's really, the whole thing's designed around Can Slim and O'Neill's philosophy. But there are screens in there that you can go through, which can help cut down on the time that you have to spend. And some of the ones that I use are looking at the relative strength line blue dot screen. And then you can do some very simple screens looking at the stocks that have the highest relative strength and the highest EPS rank. And then as I've shown on IBD Live, I use my iPad, where you can see 4 stocks at a time, and I can go through hundreds of stocks in a very short period of time using that. And so the first thing to do is on a weekly basis, you got to do this at least once a week, is spend some time and go through as many stocks as you can. You want to see stocks starting to turn. You want to see relative strength lines going, starting to turn and going to new high ground. You also want to see groups that are moving higher in rank, because maybe and that's important to look at group rankings, because then you can see which groups might be the leaders of the next bull market. Other things I look for is I watch reactions to earnings reports. Sometimes stocks are coming down and they're coming down, and then you get an earnings report that wasn't very good, and you get a positive reaction. It's like this, all the selling. It's already been coming down for a long period of time, and people are starting to anticipate, hey, earnings might start turning. And so the stock starts moving higher. One example, this is a stock I loved in the past. It's a very similar stock to where William O'Neill made a lot of money in Pick and Save. This goes way back, and I'm looking at a stock now that is Ollie's Bargain Basement. This is a stock that hasn't done well in a long period of time. And yeah, if you bring that up and see what's interesting here is you'll see that the earnings were reported and the earnings were down 75% last quarter, and they've had 4 quarters of poor earnings. But what's happening to the stock? What is really interesting is, and I was counting this today, I think the stock has had, I think it was 11 out of 15 days up and the stock has actually made a move from the 44, 45 area. It's up to 57. It's breaking the 200-day moving average for the first time in almost I guess
Long
that's
time.
9 months.
Yeah.
And so, it still has lots of problems. It doesn't have the can slim characteristics, but this is the type of thing where I'm going to go, where I'm saying, okay, they had a bad earnings report. I actually listened to the conference call, and they said some positive things on their call. And they should be getting a lot of inventory from all these big department stores or Targets and Walmarts that just have too much inventory.
Right.
So there's some fundamental changes going on,
Mhm.
and you have to ask the question, when last week you see the biggest volume that is traded on a weekly basis since really March of 21, that's telling you, hey, maybe something is going on here. Now it's very, very early,
Mhm.
but this is the one that I would put on my radar. The relative strength line is now 93, or the relative strength rank is 93. And that relative strength line is making some very good progress. And it looks like the largest high, and I mean, the relative strength line is going into highs that haven't been seen since September of last year. So these are the type of things that you want to be looking at. Stocks that are resisting the decline, that are starting to turn even in a tough market, and
Mhm.
these might be some great ideas for the next bull market.
Right. So shaking off some negative numbers, but also looking ahead, the forward looking estimates, the 2024 earnings, that we're expected to see a bit of a turnaround.
Right.
2023 down 20%, but looking ahead to 2024, expected to be up almost 50%
40.
on the bottom line.
Yeah, and from it's good to know the fundamentals. I've even though I've been out of this stock for a long time, I continue to read the conference call transcripts every quarter, and it's still a growth story. They have you see up there the description, 431
Mhm.
outlets right now, and they're going to 1,000 outlets across the country in the next, I think it's the next 10 years.
Mm.
So this is something that could be growing. It's not that old it's at least not that old to the market in
Right.
2015.
Yeah, and you traded this big move here shortly
Yeah.
after its debut. So keeping an eye on it. Well, David, I know another question that we get just while we're here, I want to go back to the RS line blue dot and looking at the industry group rankings, as you said. So a lot of people out there might be thinking, hey, this is a stock that David Ryan likes. He's talking about the relative strength line, volume coming in, breaking out. So does that mean that I should be going out and buying some Ollie stock on Tuesday?
Not necessarily. I'd love to see it. Look, you've got some overhead about 6 months ago, and that comes in at 57.86. You can see that on the chart. Yeah, that was back in September of last year, and so I would actually like to see this stock get
Take some
up and
time.
maybe get into the mid 60s or so, and then start drifting sideways, because you actually don't want to try to be buying the low or really actually the first move. You want to see how strong that first move is, and to me this is a good start, but I'd like to see it come up and build a base, because the whole objective is not to buy the bottom, but
Right.
buy when the risk is the least. And when this stock can pull up hard off the bottom with some good volume,
Mm-hmm.
then drift sideways for a number of weeks, and then maybe even come in with an earnings report that's starting to change, and you'll start seeing positive numbers. That's the time you want to start buying the stock. Right here, I think
Right.
it's still too early.
Yeah, one for the watch list. So
Yes.
we'll keep some tabs on it. Okay, so to find other watch list stocks, you mentioned the relative strength, the importance of relative strength. For those less familiar with that concept, our relative strength line, which we pointed out here on Ollie's, that blue line is measuring a stock's price performance versus the S&P 500. So a line trending higher is signaling outperformance. And the whole reason, David, that we're picking individual stocks in the first place is to outperform the indexes, right? So
Right.
focusing on that relative strength is important. I just pulled up our open stock ideas button. There is an RS line blue dot screen. As you said, you can build a custom screen too to look at relative strength ratings and EPS ratings as well, a simple screen based on that. But here's the RS line blue dot list. So how you're looking at this every week, right? During bear markets like this, how much turnover would you say do you see from week to week on your watch list, and how wide of a net are you casting? It seems like in this kind of phase of the market, seems like we want to be casting a pretty a wide net at this point. What do you think? Did David freeze? Looks like he froze.
I'm looking at as many stocks as I possibly can. Oh, you're back.
Oh, you're back.
I thought you were frozen.
Maybe it was. Sorry.
Okay.
Keep going. Keep going.
Anyway,
thank you so much, David.
You want to look at as many stocks as you possibly can, and so you want to throw out that net, a wide net. You want to do as many screens as you can. You want to use you can create your own lists on MarketSmith, and if not, you just write them down on a piece of paper. But this list will change, especially in a tough market. The stocks that you might have as a on your watch list one week might just roll over and die, and you kick it out, and you keep on looking, and you keep that list refreshed week after week, because sooner or later we're going to get to the point where that list is actually going to get bigger and bigger, because there are more and more stocks that are showing up, and more stocks that have the right characteristics. And so that list will probably go, but it has to be a very fluid list of names coming off, new names coming on, because sooner or later, then the weight of the market comes off, and some of these stocks that are on your watch list will break out, and then will probably be the big winners of the next market cycle.
And then you also mentioned looking at weekly industry group rankings. And so we can also get to that in this Open Stock Ideas button. So I can click on the 197 industry groups and sort them by rank. And you can also see the change in rank. And this is something that we do look at on IBD Live every Monday. A great idea by you to track those changes in industry groups. Not only do we want to see what's bubbling up to the top, but maybe is in the middle of the pack, or the lower third of the pack, and making its way up, making a big move up. So keeping your finger on the pulse of what you're seeing in the industry groups, especially in a time like this. And like you said, looking at the industry group charts themselves and scanning through. So we're able to do that on desktop here, to just kind of space bar through them, see what's going on. As you were talking about earlier in the show, a pretty significant breakdown in a lot of energy stocks,
right?
As we can see here. So that's notable this week. So you're just recognizing all of the different shifts underneath the surface of what might be worthy of more attention than you had been previously paying.
Yeah, and you'll see these group rankings change. I think they change once a week, if I'm right, on Fridays, and so you'll see these rankings. I mean, with the hit that happened to the oil and gas stocks,
yeah,
they will start dropping in rank if other ones are holding up. So this is also dynamic. This is another way to find stocks too. If you didn't find them on those relative strength screens or other screens, then you can look at it. A whole group is starting to turn up, you want to go into the individual stocks and see what are the leaders in that group, because that's another way you can be finding some of the best stocks going forward.
Exactly. I know you'll be doing more research this weekend. I don't know if just in the action that you've seen this week, is there a particular group right now that maybe was showing relative strength that you found notable this week?
Not
Sorry.
I'm interested to see if what if anything held up, because this is
Right.
probably one of the more
Yeah.
brutal weeks we've seen in
Right.
a
It's hard
long,
to
long
find
period
anything.
of time. I mean, I guess there was 4 out of 5 days or
Oh,
4 out of 6 days where there were 90% losers versus gainers. So you're not going to find much that held up, but well, retail specialty, that looks fairly good. But you'll probably see some very defensive groups
yeah.
holding up, or defensive groups coming to the top, and that's one thing you have to be a little bit keep this in the
Careful
back
of.
of your mind, that you'll see defensive stocks actually do better in a bear market, but then when a new bull market starts, those stocks will start dropping, because some people go to these defensive stocks like utilities or grocery stores, food stocks, and they might hold up better. But when the new bull market starts, people will sell those off and move their money into higher beta,
Yes.
more aggressive growth stocks.
A very good point. And we can get to the stocks in group in this right-hand panel there. Okay, so we've stopped the bleeding in our portfolio. We're screening for stocks with relative strength. We're looking at those industry groups. We're looking at reactions to earnings reports. What else should we be looking for?
Well, I think the other thing that you should be looking at is the overall market too, and you can, I think on the investors.com website, there's all sorts of descriptions about the O'Neill follow-through day, and I actually have my Bill's book open, How to Make Money in Stocks, and on page 220 he describes what is a follow-through day, and that's when you start getting an uptrend in the market. I won't go into all the details, but you can find a lot of great information on that follow through. And when you get a follow through, then that's probably at the time where you're going to start seeing some of the stocks on your watch list starting to break out. And that's where you can start making some initial purchases. And it doesn't have to be big purchases all at once. You can start incrementally and buy just a 2.5% position. If it starts working out, then you can add to it. And then you can also look at some secondary indicators that I think are important to look at. Advanced decline lines on the there's the NASDAQ advanced decline line, and you can see this is this is in a downtrend. Also, the NASDAQ, the Amex, I'm not sure even what's left in there, because there aren't that many Amex traded stocks. Most of them in the past used to be oil and gas stocks. But if you're looking at the NASDAQ, then you get an idea of has that come out of a downtrend, or right now it seems to be scraping along the lows. The good thing I see, at least this week, is there's the NASDAQ. If you see the NASDAQ went into new low ground, but the NASDAQ advanced decline looks like, there's new low ground, but the NASDAQ, it's still sitting right there. So it hasn't really cracked. Maybe that's just
There might
wishful
be a little
thinking.
delay. I don't know if it's
Yeah, and it
completed
might
for
be a
today,
day or
so that's one
two.
thing to keep an eye out for.
Yeah.
Let's
So,
see.
but anyway, what you want to see there is you just want to see that starting to turn up. And that's really a secondary indicator to tell you that, hey, a lot of stocks are starting to move into an uptrend. And it's just one other thing to keep an eye on, along with the follow through day. But getting down to the what is most important to me is, can I find enough stocks on my watch list to buy? And you almost let the market As I think someone said on IBD this week, let the market pull you in. If you've got stocks that are starting to move up and break out on your watch list, then you start employing capital. If they continue to work, then you add more money to the market. If they don't, well, you keep those positions small and then cut them out if they start turning back down for small losses.
Yeah, and one more thing on this indicator page, we have the NASDAQ Advanced Decline line. If you have MarketSmith, it's GMIAB. That's the ticker. You were saying not only do you look at the broader trend to see if it turns around, but you can also look at shorter term points. Like, we did see a little bit of a rally the other week. So if you saw that break of the trend line in the advanced decline line, something like that, if that happens.
Yeah, and then also if you draw that trend line from the beginning of the year in January down through March. No, go to.
Oh, okay, yeah,
there you go,
I see
right
what you're saying.
there.
Yeah, the previous
when it broke that,
March rally,
then
yeah.
that was very close to the start of a stronger rally. But again, these things are lasting a week to 2 weeks, and you want to see these things spend more weeks building new bases and moving higher.
Right. So some subtle signs there, secondary indicators to use. And so you talked about quality stocks on your watch list. And so I think maybe to end on one more characteristic, we looked at Ollie's as a potential watch list name, but we don't know how long it'll be before we start seeing a lot of high quality stocks on our watch list. But when we do, you are going to be looking for explosive volume, right, behind the price gains. Can you talk a little bit about that?
Yeah, and it's interesting if you just take a stock that has topped and has come down and then has made a turn. When a stock starts an uptrend, the characteristics of the uptrend are 180 degrees different than the characteristics on the downtrend. On the downtrend, the volume was higher every time the stock dropped down. When it rallied, the stock went up on lighter volume. But when a stock starts a move to the upside, it's usually done with a lot of volume, and it continues to go with a lot of volume. You can see the explosion in 1990, 1989 with Microsoft there. Huge volume spikes. I call them spikes because they spike up on the chart. And it's accompanied with higher prices, and it's a lot of buying, and it's a lot of buying over a number of weeks to get the stock going. And that's what you see. Sometimes I just even count the days. How many days has this stock been up in a row? Or how many days out of the last 15 has it been up? Gives me a great indication of institutional buying, because institutions can't get a position filled in one day. They do it over a number of days and even number of weeks it takes them to get their position. So you can see that Microsoft, when it took out $60 and went to new highs, it was up, let's see, from 57.75, it was up 1, 2, 3, 4, 5 days in a row, had a few days down, but then was up. Really, it only had 4 or 5 down days over about a 4 or 5 week period of time. That's the type of buying that you want to see. You want to see the volume also up. And see those huge volume that move from 70 to 80. So that's the type of buying you want to see. And you can actually even wait for that buying. Let the stock show you, let the market show you what are the big new leaders, and then buy them on the next base, the next pullback. And that's a way of letting the market show you which ones are the ones that you want to be going with.
Right. So we were looking at it right here. It gave you at least one more opportunity before another big base along the move here. I pulled it up because I remember on IBD Live you talking about, and I don't remember if it was that specific date and base with Microsoft, but looking at some of those turnaround signals, we were talking about some of the beaten down IPO names and what signals we might be looking for on the price and volume front for them to turn around. We looked at Apple in its early days. We looked at Microsoft as well.
Yeah, if you look at that December, the end of December of 1990, you'll see a great cup and handle that formed on Microsoft. And and there were a number of other stocks that had similar cups and handles at the same time. I think Home Depot might have been another one, but these were stocks that had come down, but then started resisting the decline, didn't make new lows when the market made new lows, and set up great bases, and then exploded coming out of there. Yeah, look at that cup and handle. Look how tight it got in that December period. Yes, there. I mean, the stock was hardly trading. Look at the volume at the bottom. The volume was there. Where was everybody? Maybe they were on vacation or something like that. But boy, when it came back in January, that thing just took off and had just a terrific move.
Exactly. All right. Well, we will be on the lookout for that. So I think in closing, David, what would you say for those who are feeling the weight of the doom and gloom, of the headlines, of the rising rates and inflation and recession fears and the housing market and the stock, I could go on clearly. Yeah. So there's a lot that can weigh us down right now, but what keeps you positive in the face of all of this?
Well, what keeps me positive is, and things that Bill just hammered. I heard it so many times that this is the greatest country in the world, and there are more opportunities here. And then if you just keep an eye on the markets, you keep an eye on the stocks, that sooner or later the next big winner is going to show up, and you can get aboard that. Especially with the tools that they've got on MarketSmith, that people are love to come to they're going through so many hardships trying to get into this country, and some of those people and some of the entrepreneurs are the ones that are creating these great companies that are going to be the next big winners. So there's always a bull market around the corner. We just don't know. Is it 3 months from now? Is it 6 months from now? But if you do your homework, you get your list going and you keep them active, and you stay at it, sooner or later, your list is going to contain some of those big winners, and you can make a great move in your portfolio. And lastly, get back some of the money that you might have lost in this bull market. Or the bear market. So.
Yeah. And you've been through a number of bear markets now. So, missing out on the beginning, even couple of months of a bull market, if you are caught flat-footed and you wait and you're not doing the work now and ready when we do start seeing those significant changes. I mean, it feels like that there's a big difference between, the kind of returns that you could expect early on in a big bull market versus in the later stages.
Yeah, I think, and Bill said this in his book. He said that you make most of your money in the first year and a half of a bull market, and then it starts getting harder because a lot of these stocks have already had big moves. So yeah, it's constantly doing that work, and you just have to stay optimistic and not get so down. But that's why we have all, he's come out with so many rules, and you have so many rules to take the emotion away and to move you out of the market when things are rolling over, but to get you back in when things start setting up again. And and these cycles just repeat over and over again. The setups are the same, and it's just waiting for these things to set up again so we can get aboard the next big winner.
All right. Well said, David. Thank you so much for sharing your bear market checklist and how you prepare for the next bull market, which, like you said, it's around the corner. We don't know exactly when, but we now, with your guidance, will be ready for it. So thank you so much for spending the afternoon with us.
Thank you. Bye-bye.
All right. Thank you so much for watching Stock Tales, everyone. I do this every Friday with a trader, so make sure you tune in next week at 5 p.m. Eastern for some more great insights from expert traders. We'll see you then, and have a great weekend.
Bye.